Hernan, when you look, first of all, at, I guess, what is keeping M&A on track for one of the strongest years ever, what exactly is driving this?
Well, first of all, this must be a real letdown for your viewers. It's such an exciting day. You've got sort of some banker coming on television. Listen, we are fundamentally in an unprecedented M&A market. If you know, we're on track for 2018 being the best ever M&A market, surpassing 2007. And I think that what's unprecedented about this market as well is the shape of the market. Usually what we've seen in previous cycles is that you hit the top, like in 2000, and then the next year is 30% down. You hit the top in 2007, and you've got, again, 2 sharp years of decline. In this cycle, in 2015 appeared to be the peak. 2015 was the second best M&A year after 2007. And then we had 2 years of gradual decline. And then all of a sudden, 2018, up 40%. So it's almost like a double peak cycle, which is unprecedented.
But is it animal spirits? Is it the funding? Is it that people see synergies, or that they're desperate?
Well, I think that the main thing is confidence. If you look at GDP growth, so my economist friends say that there's 4 economies. There is emerging, mature, Argentina, and Japan. And Argentina is growing, Japan is growing. Europe is growing, North America is growing. So there's GDP growth everywhere, which we've not seen for some time. If you look at corporate earnings growth, record highs. If you look at the MSCI Global Index, for the last 2 years, double-digit earnings growth increases. And then if you look at volatility, if you look at the VIX, very little volatility through 16, 17, trading at between 10, 15. We saw a big spike in Q1, but now we're back to, I think it was trading like a 12 yesterday. So you put everything together, and it's just a very benign environment, which gives a lot of confidence to boards and CEOs to go out and do deals.
Hernan, is it too benign? Do you worry about bubbles out there?
I worry about where are we in the cycle. I think that we are. Football is now very, we're about to start
it's very topical.
We're about to start the World Cup. So we're definitely in the second half of the cycle. I don't know if we're in the 5th minute, and the 15th minute, or in the 30th minute, but we're in the second half, okay? But a lot of the discussions that I also have with clients is attack is the best form of defense. So if I can do a deal now that gives me exposure to growth segments, where I extract synergies, I'm going to have some earnings runway for when the cycle starts slowing down.
Hernan, you just brought up a really important point, which I'm sure is the game theory you learned at Claremont McKenna a few years ago. If these deals that are being done, is it mostly a strategic deal so that the other guy doesn't get the transaction, you get the transaction to defend against your competitors?
It is a cycle which is strategic, in nature. A lot of the deals that we see are, as I just said, about how can I make my business a stronger growing business? How can I make my business more resilient? How can I disrupt myself before others disrupt me? But there is also, Tom, an effect that if I see my next door competitors, if I see my neighbors doing good, smart deals and the market rewards them for it, I need to react. I need to match that.
I mean, within that is the cost of money. I mean, if we have a Fed rate increase and it's quadratic and we get out, where do you see within 2018 and 2019 where the game gets more expensive to play?
I think that with regards our expectations of how rates are going to increase, I think that for the foreseeable future, we're going to be still extremely low cost of funding. So that's not nothing that concerns me. And in fact, what I do think is that this normalization of rates just gives confidence to all the participants that the economy is normalizing, that the economy is in good shape. So I see the short-term rate increases as a positive rather than a negative.
Hernan, when you take a look at Asian M&As, they've risen about 27% this year, pretty much driven by China. Now, with China under greater scrutiny from the U.S., what are the prospects for M&As here?
Well, I think that when we look at our M&A business in Asia, I'd say that first of all, Japan is a big feature. I think that we've had a thesis that, given the lack of growth in the Japanese economy, Japanese corporates need to go out. A lot of the largest companies in Japan are excessively, in my opinion, exposed to the Japanese market, and we expect there's going to be more Japanese corporates going offshore. I think that our role advising Takeda in the Shire transaction is an indication of that. But I don't want to rule China off. I think that China, will come back. China is a huge economy with significant global ambitions, and don't write China off. I think there's a parenthesis in terms of activity. There's a parenthesis in terms of some of the, if you like, national security concerns that many economies are considering. But we fully expect that China will be back and active in for the foreseeable future.
We've seen a huge jump in number of healthcare deals. Why is that, and will it continue?
I think, Francine, we've seen a jump in healthcare deals. We've seen a jump in any number of of transactions. I think that it just goes back to there's been so many deals in that sector, and as what I was telling Tom earlier, that competitors almost feel compelled to react to that. I think that what's also interesting about healthcare is that there is there's an adjusting business model. I think that at a point in time, many healthcare companies felt the need to develop new products, R&D, in-house, and increasingly there's a model that, as opposed to solely developing those products in-house, a good way of developing your pipeline is by acquiring companies, particularly in the biotech sector, that have promising new products. So I think this also responds to somewhat of an adjustment in the business model of the pharma industry.
Mr. Cristerna, thank you so much. Hernan Cristerna with JPMorgan.